VA loan questions you need to know. There are so many questions about the VA loan that we get every single day, and I like to answer a few of the random ones that aren't necessarily the ones that are all on Google. All right, so let's cover a few of the VA loan questions that you need to know before purchasing a home. All right, let's get right into it. Well, actually, first, before we get into the questions, look, don't forget, I'm Mercedes, the military realtor. I have served in your boots before as a previous active duty sailor and homeowner, so I know what it's like. And basically, my whole goal here is to save you money, energy, and time when it comes to real estate, business, stocks, and finance. All right, we love wealth around here. I want you to be wealthy in all the ways that you want to be wealthy, whether that's dollars, whether that's your social life, whether that's your career, whatever it is, you deserve to be wealthy. All right, and that's my goal. All right, so let's keep it moving. All right, number one question for today is, can you refinance a VA loan into a conventional loan? All right, now why would you ever want to do that? Right, the VA loan has no private mortgage insurance. It's 0% down when you get it. Has some protections for veterans when it comes to being behind on your payments and foreclosures. Right, so why would you ever want to get into a conventional loan? Well, the conventional loan has less red tape around it. So the VA loan, in order to use it, you have to remain in the residence for at least 1 year. Okay? That's not that big of a deal. Not that big of a deal. All right? Now, you may want to free up some of your entitlement to then use it on another property. So, hold up here. Hold up one second, y'all. Okay, no, we should be good. So you want to free up your entitlement, okay, but here's the kicker, is you're not going to be able to free up your entitlement. And if you do, it may be the wrong move. Now, why would going to a conventional and freeing up your entitlement to buy another property, why would it be the wrong move? Well, in this case, if you did this, you can only do it through a restoration. It's a one-time restoration. Now that's when you refinance. That is different from selling or paying off. And when it comes to refinance, it's different. Refinance is different. If you were to sell or pay off, you would get your entitlement back. But when we do the one-time restoration, it is a one-time restoration. You'll be able to get that money back and then use it again, but only one time when it comes to this method here. You don't have to do a refi with it, okay? You don't always have to do a refi, depending on what you're trying to do, right? This is why I like to talk about strategy first before we get into something, okay? Because you may not need to refi and say, hey, I'm wanting to refi out of this. Actually, to go to conventional, sure, but I also want to get some cash out and put it into another property, right? You don't have to do that. You don't have to go to a conventional to then do that, okay? You can use your VA loan multiple times as long as you have room in your entitlement to use. And then you can gain your entitlement back if you sell or if you pay off. Okay? Now here's a little extra nugget that we won't cover in depth in this video, but here's an extra nugget. When it comes to assumptions, a lot of people just don't know that VA loans are assumable. All government-backed loans, including FHA, are assumable. And the VA funding fee to assume a loan is 0.5%, which is a lot lower than if you were to do a regular purchase. So if you know about the VA funding fee, the VA funding fee can be anywhere between 3.3% and 1.15%. So a 0.5 on an assumption, beneficial. So look, can you refinance a VA loan into a conventional loan? Yes, you can. I would talk to someone like myself so you can get a strategy before you choose to do this, because I question, well, what else are you trying to do? Are you trying to do something specific? Are you trying to just lower your payment? Are you trying to move somewhere? Do you want to invest in a different type of property? Let's have this conversation. And then don't forget that if you refinance into a conventional and you want that entitlement back, you have to do a one-time restoration. And we don't like one-time restorations unless we're going to do them for the largest property on the entitlement, ideally a property that's taking almost all of the entitlement. So we can do the one-time restoration without having to sell it or having to pay it off. We could refi it and then we can keep moving. All right, so let's keep moving to the next questions here. Don't forget, this is VA loan questions you need to know answered. All right, so let's see. Question number 2 here. What we got? Okay, does a VA loan require appliances? Okay, let's think about this. Does the VA loan require appliances? Okay, so fun fact, on the realtor side, a lot of people don't realize that appliances aren't real property. They're not real estate. Okay, those are personal property items. So when you're purchasing a home, you're not paying for those items. Okay, now you guys might do concessions back and forth or a trade-off to try to pay for those appliances, but we have mitigation for that as well, right? At a certain amount, because some of these appliances could be a lot, or percentage-wise, they could make up not a significant, but a portion of the entire purchase price, right? Let's say you're buying a $200,000 house and it has all new appliances, right? Stainless steel, right? Relationship is very different versus a home that's $1 million with those same appliances, right? You get me there? Okay. So when it comes to the loan, you're getting a loan on the real property, on the home, and maybe if there's trade fixtures and stuff like that, not common. But let's say on the property. The appliances are not the property, okay? They aren't real property. They'll most likely be done on a separate form, personal property form, showing conveyance of that, right? For a certain amount, could be for $1, could be whatever you guys want to do. But just so you guys know, we'll get into it. The VA loan wants your home livable. That's one thing. They want your home livable. And if you're looking to do renovations or you need to do renovations, you can possibly get a VA renovation loan on the front end of your loan, move into it, do the renovations, and you just fix up your place all on that VA loan with the VA renovation loan. So they want your home livable, right? It has to be livable. But don't assume that every appliance is included. We'll talk about it, all right? Now, the VA has MPRs. These are minimum property requirements, right? It has to be safe, it has to be structurally sound, and it has to be sanitary. Now, appliances are not required by the VA when purchasing a home. But if these appliances are present and built in, like a stove, some stoves are built in, they must be functional. A refrigerator, washer dryer, or microwave is not mandatory under VA rules unless local building codes or the appraisal dictates otherwise. Now, buyers often expect all appliances to stay, but it needs to be in the contract, okay? It needs to be spelt out. If you don't know, spell it out. Put everything, we're talking everything in the contract. Have your realtor put everything in there. Right now, this is why you got to be a licensed realtor, because you know that there's a certain nomenclature, there's publications, instruction that talks about what is considered a part of the home, what isn't, what's a trade fixture, what's personal property, what's real property, right? That's for us to consider. But look, when it comes to you working with a realtor, make sure if you want that appliance, you're telling them, I want that appliance. And here's a story. Here's a story for you. So you got to buy in or seller. They get under contract. The home has a garage. Now they have a old refrigerator in the garage to put some waters in, some drinks, some extra stuff, right? So we go through the contract, the entire contract from beginning to finish. We close, right? The buyer comes to the house, right? They got the keys. They see all the appliances are gone in the house. They said, "What?" They said all the appliances are gone. Everything, how could they all be gone? I thought that's what was in the contract, right? And then you look in the contract, there was no verbiage on which refrigerator was going to stay. Whether it was the refrigerator in the kitchen, the one that you wanted, or it was the refrigerator in the garage that is the old one that's barely running. right? So everything has to be spelled out. If there's any question of this, that, of a light fixture that you really want, if these are things you really, really specifically want, I need to make sure that just have them all in the contract. Tell your realtor, hey, look, these are 10, 20, whatever things that I really want to make sure that are in there, you know, that I want. Now, I'm not telling you to say the garage, okay? We get it. The garage is real property. But there may be a chandelier, right? That's not necessarily hard mounted by whatever means. And they may then try to take that chandelier, maybe an expensive chandelier, right? Some like that. Even down to the fireplace, even down to the fireplace pokers, right? There's publications about that as well, because it's not a part of the property. It's not attached anywhere. You know what I mean? So if you don't know, spell it out in the contract. All right, let's keep it moving, but make sure you tap like and subscribe wherever you're watching. Like it, subscribe, follow. That lets me know that I'm producing content that directly helps you and is valuable to you, right? I wouldn't make any of this content if it wasn't valuable to you. All right, let's keep it moving. So let's talk about DTI limits, all right, debt to income limits. So a lot of people think a lot of their debt disqualifies them, and DTI isn't everything. So VA loans recommended DTI ratios around 41%, but there is no hard cap when it comes to VA loans debt to income ratio. Right? Many lenders approve up to 50% DTI, sometimes higher if residual income exceeds VA guidelines and strong credit and assets are present, right? Everything is considered. Everything. Please don't think, oh, I have a low credit score, there's no way I could buy a house. Not true. The VA loan does not have a minimum. Doesn't have a minimum. You know who has a minimum? The lenders that cut the VA loans, right? And the lenders, you can choose who you work with. The lenders, I want you to know this, lenders are not for the VA. They're not a part of the VA. They're a private company that does VA loans. Okay, so that's why it's important to go shop and to know that, right? Different lenders have different overlays, different fees, different processes, different this and that. If you don't like them, keep moving. You know, you don't have to work with them if you don't want to. You shop around, all around, all right? So let's keep it moving. Let's keep it moving. So your residual income can be a secret weapon. And VA uses a formula to calculate disposable income that is based on your region, the family size, and the loan amount. So, for example, a family of 4 in the West, let's say they may need about $1,117 a month in residual income for loans up to 80K, right? That's a loan that's 80K in the West, all right? You do with that whatever you want, all right? Now, lenders may allow a higher DTI if you surpass the benchmark, all right? So talk to your lenders, talk to me, I'll point you in the right direction of a veteran military lender that I highly recommend and that I work with. And it's just us having these conversations of, okay, well, let's take a look at what you want. What do you got right now? What are your finances? You know, what's your income? And let's have this conversation now rather than just hiding under a rock for so long and just thinking, I can never get a loan. I can never get a loan, when you may actually qualify today. All right? So let's keep it moving. So the VA loan disability waiver. If you have a disability rating, even 10%, right, you could save thousands in fees. A lot of people don't know about the VA funding fee until they're in a transaction. They're under contract on a property, and they're like, wait, there's a fee? I thought this was 0% down, right? So let's make sure you don't leave any money on the table at all. So let's go ahead and talk about it. Veterans with a service-connected disability, 10% or more, are exempt from paying the VA funding fee. All right, go check out my other video about the VA funding fee where I go in depth on all the different layers of it, right? Who is exempt, who has to pay it, and the details. All right, so this applies, the VA funding fee applies to purchase loans, Streamline if you're doing an interest rate reduction, cash out refinances, and new construction as well. Let's see. So, you know what? I'm not even going to mention these numbers. You got to go watch my VA funding fee video. Okay, look, if you're interested in purchasing a home using your VA loan, you need to watch this video about the VA funding fee because you could save thousands. All right, we're not going to get too deep into it right here, but there is a waiver for the funding fee which could save you thousands if you qualify. And here's a little Easter egg too. If you have a Purple Heart, you could still get exempt while you're active, and it's one of the very few people that get to have an exemption on their VA funding fee on the purchase of the home using their VA home loan while still active. All right, so if you know someone if you know someone that has a Purple Heart, send them my VA funding fee video, send them this video, and let them know that they're possibly missing out on money if they're not letting their lenders know that they have received a Purple Heart. All right, let's keep it moving here. Don't forget, tap that like and subscribe all day, every day. All right, now the nearest living relative on a VA loan application. Okay, so some people have asked about that. Why does it ask for a nearest living relative on my application? They're not applying with me. What does that make sense? Well, so it doesn't make sense at all, but you do need one listed, right? I used my dad, even though I didn't talk to much. I was like, I gotta put someone, so I put someone. All right, and that's hopefully so that they could track you down if anything goes right sideways with your loan. So this is not a cosigner or any type of financial participant on the loan. Now, it's a contact person that is used in case you become unreachable or estate type of emergency, right? In case something were to happen to you. So if either they can't get in contact with you or something happens to you, right? They want to be able to contact your closest relative. So it's required on a couple different forms. Just have someone available. It could be sibling, parent, adult child. Now why it matters? Well, if you don't provide it, it could delay processing. Okay, I wouldn't. It's not the biggest of deals. All right, but look, you already know it's about that time. Drop a comment with your thoughts on these specific topics, and if you have any specific questions that you want me to answer in depth, put it in the comments so that I can see and I can make more content about it. That's all I'm here for, is to help provide you value and make content for you that is actually helping you, right? There's a lot of content out here that is just regurgitating stuff that you can easily find, and it's not actually providing actionable insights and value for you. This is all about you. Everything is about you and providing value for you, not me at all. I'm just here to provide the message. That's it. So look, take care, God bless, and do not forget, I'm telling y'all, don't forget, ownership is freedom. All right, y'all, take care.